Welcome to the Profitable Farmer Podcast, where it's all about increasing the profitability of your farm by working smarter, not harder. And now your host, business expert, Andrew Roberts.
G'day, Terry. How you going?
Hey, Andrew. Very well, thank you, as usual.
Mate, great to have you back. And how's everything going for you down in Sydney? Having a good week?
Yeah, no, so far I have a good week. The market volatility is actually throwing up opportunities, so therefore it's actually a really busy time of this period, and lapping it up with all the headlines driving prices down, therefore being able to get a lot of things that are cheap.
Oh, mate, it's I'm really looking forward to diving into that. And the reason why we wanted to do this podcast, I was having a conversation with Terry just last week, and we were talking about the markets. And last week the market fell out, and there was an amazing opportunities being presented, Terry. There's a lot of negativity in the media, which I want to talk about as well today, if that's okay.
Sure.
And we just decided to do a podcast and talk about this. And Terry had a very clever way of relating it to investing being just like planting. But before we dive into it, Terry, in case this is the first time a farmer has heard from you, can you maybe just share briefly your background and what you do?
Sure. My background is this is actually my 40th year in Australia, so it's my anniversary in Australia. Migrated back in the late 70s and post-Vietnam, Vietnam War child. And we're lucky enough to land in this beautiful country. In actual fact, we got saved by a cargo ship, and they took us to a immigration camp off the coast of Malaysia, and Australia was the first country that put up their hands and took our family in. So therefore, I understand all the financial difficulties because I've seen it firsthand, how my mum, a single mum that struggled financially, and that was sort of my driving force towards creating financial freedom for myself. But at the same time now, that's planted the seed for myself now to want to actually help the Australian public that are, financially struggling. And I know a lot of farmers where, they all they have is the farm, and everything must go well with the farm. But as we're all aware, with farming, things can change with the weather, drought, which I know a lot of farmers are suffering from, and sometimes even flooding, over rain. So what I'm trying to do is now help farmers in particular to have them be able to create something outside the farm, and therefore be able to be okay with their family financially, no matter what happens on the farm. So it's diversifying away from the farm. Farm is the cash flow. And I know, Andrew, you and Greg do an excellent job on helping farmers create that farm to become a profitable farm. And then my role is to come in and, what do you do with the profits now? Let's take a chunk of that and start creating a portfolio outside the farm.
Oh, and you do it extremely well, Terry. And just to be upfront, I'm a client of Terry's. I'm a member of a program that Terry runs called the Freedom Trader, where Terry will teach everyday people like myself that have never had experience in investing, and it's a proven system to learn really how to value stocks, buy stocks, and figure it out, and not just rely on others to make the money for you. That's been one of the biggest things for me. It's just the power that you get from knowing that I'm in control of my money, and I don't have to worry about people taking fees. And Terry, it's such a fantastic program, and I know we'll put a webinar below this. Terry will be running a complimentary online training regularly for you, so you can check out the link below and come along and have a listen to Terry's theories. But we're not going to focus on the theories as much today, Terry. I want to talk about this concept: investing is just like planting. Can you elaborate a bit on that, please?
Yeah, I mean, there's this term that what down the track, or even now, what sitting under a shady tree today is because someone, of course, planted a tree years ago, right? And that germinated from a seed. And investing is exactly the same thing, because people want to, as time goes by, people go, oh no, I can wait. They procrastinate. But what is the most powerful thing in, especially investing and trading, is that it's the word compounding. Mm-hmm. And compounding, of course, takes time. And compounding allows you to not take a risk, because the more time you have, the more relaxed you can be to not take on board the risk as you get older and older. And time, we all suffer from time in terms of we get older, but it's very important that no matter where you are now, you basically start, no matter how small, and then start planting the seed of investment capital and letting that grow. So I see that very complementary to just like farming. Of course, we all, as farming, you plant the seed and there's always a season for planting. There's a season for harvesting, and exactly the same as investing. And now, this is a great topic because this last week and this week, the volatility of the market is throwing up the opportunities, and this is the time for planting. And then down, maybe a couple of months down track, the time for harvesting what we plant today.
Yeah, I mean, I think this is so related to farming, and farmers understand this, that there's such a patience game, and let's just talk about this concept of timing, these ways of time that I believe you refer to it as, Terry. Can you elaborate on that even more so?
Yeah. So, I mean, depending on, even like in farming, right, there's obviously certain crops that grow at a certain time in the year, mm-hmm. and you need to plant at this point in time, because if you miss that timing, then literally that's it. You've missed that season. Mm-hmm. So same as investing, of course, within investing, it's not exactly as a precise science like farming, where, at this month, in this point in time of this year, you must plant, and then at another month, you sort of harvest the crops that you grow. In investing, the planting season really happens because of headlines. So news headlines like when the trade war that's happening with Chinese and US, and that's been going on for about a year now. And then other times when there's Brexit, for example, and that's going on for 3 years. But those things happen, and they throw out these news headlines. And despite the challenges of that time, I see that as a contrarian investor, that I actually don't mind those type of headlines, because that drives down prices, and we generally want to come in and buy things on sale. Mm-hmm. So, I mean, if I relate that to farming, it's just like crops, as well as maybe, herds of cattle. If you're in the cattle game, when things are on sale, you generally want to buy more of it, because you know that they're valuable and they can be sold down a track, right? So exactly like investing in stocks, things go on sale when there's news headlines, and if you sort of miss it, or you fear those headlines, then you'll miss it, and you'll see it reverse. The prices reverse back up, because in time everything does, because everything does have value, just like stocks. So we are literally buying the best companies on the planet at a cheap price. Yeah,
and also, Terry, I'm in your program, and really the last, let's say, 4 or 5 months,
yeah,
there's been little to do, correct? There hasn't been a big drops in the market like we've just experienced. There might have been a little bit of activity, but really there's that concept of holding patiently, and waiting for an occasion like this, which doesn't happen all the time, but it happens. And well, there's two things that I want to just ask about this, actually. And number one, why was the market, if you like, not really doing much over the last 5 months? And number two, what's been the cause of, why is the market all of a sudden dropped recently? What's causing this?
Right. Basically, when I talk about headlines, a couple of economic factors that are happening. One is that the markets, in actual fact, have been going up and up and up, and we participate in that. But about a month ago, I actually said to our students, it's time to reap the rewards now. In other words, let's start harvesting. Don't get too greedy, because things are overpriced and they can only go so high. And for those who are running out of cash, start harvesting and bring back the cash back home, because cash is king in times of crunch. Therefore, things that are overvalued now, we saw that, and slowly over time, a lot of our clients began starting to harvest or bring back the cash, sell out, lock in their profits, and a lot of our students had between 50 to almost 80% in cash, which is awesome. Yes. And even ourselves, we had about 72% in cash ready to go. So we've been waiting for this period for about 3 or 4 weeks, and at times when I go into our student the Inner Circle podcast that I run. And I felt like a broken record, that I was just saying, look, guys, the market's is holding steady. Nothing's happening. Really, in the end, there's no news headlines. Mm-hmm. And everything that's been built in is just being good news. And just all it takes now is a little bit of bad news for the market to plummet. And that's what actually happened. So really, the market prices in great news. And if it gets into euphoria and everyone thinks, complacency, people get too comfortable with a certain level. They think that everything's hunky-dory. It will continue on. But of course, nothing continues on like like basically like the escalator. It will go up continually. And there will be a certain point that, enough's enough. A lot of fund managers start selling out like us. But because they start selling in waves, they literally do control the market. So when there's too much selling, in other words, too much supply but no demand, that's when the market drops.
I mean, it's fascinating, isn't it? And really, before I did your course, Terry, I would have seen the markets drop, and immediately I would have got a feeling that, oh, wow, we're about to have a recession here.
Right.
And that would have brought on an element of fear.
Yeah.
But definitely wouldn't have triggered, there's an opportunity to buy here, correct?
Yeah. Yeah.
And why do you think that the masses experience, if you like, that fear when they see a drop? They might be thinking, "Oh, here we go, big recession, depression, or whatever."
Yeah, because I think it's because of that lack of knowledge. Because a lot of the fear is really because they have no idea what's actually happening. All they're seeing is news headlines on the newspapers, at news when I turn on the news. And even like last night, sensational headline on Wall Street Journal said 800-point drop, biggest for the year. On a percentage basis, though, it's not the biggest percent for the year. It's 800 points, but it sounds big because it creates the headline so people can read the newspapers. Mm-hmm. So therefore, the unknowledgeable will read it and go, "Oh my God!" And because they have no idea about valuations, about the actual stock market, then they get into that panic mode. But as an educated investor, what you'll find is that you'll see it more of an opportunity because first, you've already done the research. You know what stocks or what companies you want. And they're not stocks. I always say, there's a mindset shift. We are not buying stocks. We are buying listed companies that have a great business all they're doing is just being listed on an exchange. Yeah. And if you're comfortable and you've done the research and you want to buy these businesses that produce great profits every year in, year out, despite recessions, then you're finding an opportunity to finally get into and buy these companies at a great price. Mm-hmm. So just like a farm, I mean, if you were to buy a piece of land next door and you want to expand your farm, you wouldn't buy it overpriced. You wait for, a opportunity to happen when, say, someone is desperate selling their farm or selling their farmland, mm-hmm. and you'll go in and buy that farmland. Exactly the same thing. So all we are doing is waiting for that opportunity to buy great companies at the right price. So if you know what something's worth, then when there's a drop, we actually get excited. We don't get scared.
Well, this is really, isn't it, this Warren Buffett quote of when everyone's being greedy, watch out, be fearful. Yes. And when there's fear in the marketplace, that's the time to be greedy, right?
Exactly.
Buy up. And it's a perfect example at the moment.
Here,
and you're saying get excited.
Correct.
Which is the opposite to what I once was. I would have been quite fearful. It's just a different way to look at it. And you're absolutely right. I think the big point to make here is when you see the markets drop like this, there's often big opportunities around
yes.
to be, as you said, to be buying good quality stocks underpriced.
Yeah. Correct.
I mean, just that makes sense to me. It makes sense to you. What does that mean though for our listeners? Can you value a stock? And how do you know a stock's undervalued?
Oh, easily. You definitely can value a stock. Stocks in the end, they're driven by obviously profitability of the company, cash flows. So there's a couple of methods that we use, that you can use, but we use what they call the equity multiple model. So all we are looking is 3 or 5 years, last 5 years worth of, financial data. Has the company been profitable year in, year out? The returns they're getting in terms of the profitability the company is making. And from that, we've actually, even in our program, we've built in a formulated calculator where you just plot those numbers down and it will give you a rough guide. So an example, this is an example that I believe, Andrew, you've probably heard of before, where I compare 3 car companies. Mm-hmm. So the one car company is the Tesla, which is the future of the world, in terms of electric cars. Their price, they were once priced at $50 billion for the entire company. But then there's also 2 other car companies, which was GM, General Motors, as well as Ford. And they were priced actually exactly the same price. So for a $50 billion price tag, if someone actually had that much money, you could literally buy the entire Tesla. You could either buy the entire General Motors, and you could probably buy, you can also buy Ford, but with a $5 billion change as well. Because I think Ford was only valued at $45 billion. Okay. However, that's just a price tag. But if you look on the numbers wise, by utilizing just say something as simple as like the PE ratio, price to earnings, which a lot of people use. And for that price though, what do you actually get out of the three companies? One is Tesla, which has been losing over $1 billion a year. So you invest 50 billion and yet you lose $1 billion a year, and you have no foreseeable future you have no idea when the actual profit may arise. They're saying it might arise 5 years later, but that's a punt. It's a gamble. Whereas General Motors, the moment you invest $50 billion, you're getting a $5.5 billion return year in, year out, and it will grow. So you're getting almost 10% yield straight away. And Ford was providing about $3.5 billion. So on one hand, you pay $50 billion with Tesla, you lose $1 billion a year, and you'll lose $1 billion or maybe $2 billion the next year, and you have no idea when you'll be profitable. Whereas in GM and Ford's case, from the moment you invest, you already know that you're getting a return. So that's from a valuation point of view that you could see that one is overvalued. It's just based on headlines of the future. It's a gamble. And the other two are priced accordingly. So yes, you could actually, price.
And how many people without understanding investing, definitely once upon a time myself, and very much still learning as well, by the way, Terry, but would have been pulled into the hype around, as you said, Tesla, because you think, those old companies are gone. Tesla's this new upcoming business, and you think, what a great investment. I mean, if I'm going to put my money somewhere, I prefer to put it into that, right? And that's the media can create that, correct?
Correct.
And a naivety in knowing where to put your money. And I'm just so grateful that you teach this theory, Terry, because so many of us just don't understand these things.
Yeah.
And not only that, we listen to a journalist that writes an article in a paper that could be a 21-year-old, graduate from uni that's got minimal experience in investing. They don't really understand it themselves. They just want to sell the news, right?
Correct. And Andrew, just following up on what I just said earlier, if you recall, a year earlier, I was on your stage, on your platform in the Farm Owners Academy, right? Yeah. And I was giving that example at that point. And that point, I think Tesla was worth about $300 per share. And I said, would you choose Tesla over GM, which was price range was much lower? And interesting fact, now it's a year later, after I spoke and we taught, I think it was almost 100 and something farmers on stage. And after we spoke, this whole year has now proven that now, in actual fact, what Tesla's happened in that year is Tesla's dropped by about 30%, is now a $200 stock, yet GM's gone up by 20%.
Funny.
So the numbers don't lie. The numbers are there. It's whether you take the time out and educate it to look at the numbers and know what you're doing, so you don't get pulled into or sucked into these so-called hypey type companies and start losing money from day one.
Terry, talking about this waves, the timing and the patience that we have to have for the timing. I mean, you can also, I don't know if you could share an example of an amazing return you've had in 1 year.
Sure.
And a terrible return you've had in 1 year.
Sure.
But when you average it out, it's been a consistent, done really well, right? Because that's the other thing, correct? Like there can be extraordinary years and average years and it's the patience of the 10, 20 years. But can you just talk a little bit more about that, please?
Yeah, I mean, one of the best examples I'll probably give you is during, and people will remember this, the global financial crisis, the GFC, back, over 10 years ago now, back in 07, 08. So terrible year was during the GFC, we actually saw it coming. So we sold out a bunch of our stocks. We held about 60% in cash, 65% in cash. So we had a lot of cash, and literally there was nothing to do for a whole year. Our portfolios went down by about 6-7%. So we were negative 6 or 7%. But then I went on holidays because there was no opportunities. Everything was actually on sale, but there was a lot of fear in the markets. So we were waiting to a time to finally plant that 65% cash back into the markets. And when did that time come? It came almost about 12 months later when finally things stabilized. The fear was still there, but if you knew what you're doing, things were now very cheap. And the following year, we got in the 40-50% returns in the next 2 years. So I think it was 38% for the first year in 08, and then almost 40-odd% in the next year. So we had almost doubled our money within 2 years and we had no leverage. It was literally just cash returns. And I would say that was probably the lowest type risk type investing you could do, because things were totally on sale. We were literally half price bargains.
Yeah.
And you can see that as long as the market finally accepts that, it'll push the price back up, because and again, at the end, it's not, we are not the only ones that are investing properly. There's also great fund managers out there which control billions and basically $1 trillion worth of capital out there, and they are the ones that create the demand and supply. And if they're back into it, as long as we basically go in for the ride. So we are investing just like great fund managers around the planet.
Wow, mate, I just love that. And so the thought of a big crash coming,
yes,
is welcoming to you.
It's very welcoming, and that's one big crash. And another example was Brexit 3 years ago. Because we've got something like what we call the VIX, the volatility index, and it was so much news where I was surprised that Britain the public voted to get out of the EU, and that literally drove prices down within 48 hours. I think between 10 and 15%. So the market tanked 15-20% in literally 48 hours. And when I watched the ABC News, I saw it. And I go, oh my God, that was a surprise. I did not expect them to vote to get out of it. I actually thought they would go the other way. And at that time, we were cashed up as well, because things were overpriced. We sold out. So half our portfolio was in cash, more than half, about 60%. And literally within 72 hours, we ran out of cash because everything plummeted, but yet the VIX showed us nothing was happening. It was just so-called headline news again. So we reinvested everything within a 72-hour period. So for the first time in a long time, I ran out of cash.
Wow.
And within 2 weeks, we made that 15% return very quickly. And that was probably the fastest return I've ever made. Just in, out, then headlines came in, 48 hours later, went back in, fully invested, 100%. I literally had no more cash. And then within 2 or 3 weeks, we sold out again. And that was one of the fastest returns I've ever made. And that was only 3 years ago in Brexit. Yeah.
Fascinating.
Yeah.
And really the volatility at the moment is this whole US-China trade dealing, correct?
Yes.
And because they still haven't got clarity on it, we're potentially going to experience it.
Oh, a lot.
Yeah. So really there's, plenty of opportunities around, but we also need to be careful too.
Yeah, definitely.
Yes.
Yeah, caution is definitely warranted, because, and this is why I say
it could drop further.
Yeah, correct. Yeah. And I do believe the volatility will drop, and the market will drop even further, which I'm hoping it will, in actual fact. But that question of, is there going to be a recession? And I ran a quite a long session on what actually causes recessions. So there's this talk of is the recession happening? So there's usually a couple of things that happen with recessions. First is interest rates are very high. And when interest rates are high, people start pulling back because their mortgages are up. They can't afford to go out and spend. But at the moment, as we're all aware, interest rates are very low. So in actual fact, consumer confidence is still very high. People are readily going out there, having dinners, buying things like normal. There's actually been not much change in behavior. The other thing that is very important for people to understand is recessions usually happen when there's high unemployment. At the moment, there's actually almost full employment from the employment rate point of view. Australia, as well as the United States. In actual fact, it's quite hard for people for employers to get the right people, because there's no employees around that are ready to go for work. So employment's still very high. And finally, the other thing is the consumer confidence. People are still going out there and spending like usual. And that's really the cause of recessions. So all this talk of recessions, yes, it may happen. Maybe it's a year or 2 years down the track. We monitor that. But at this point in time, as I see it, there's definitely no recession. The US-China trade deal, from my opinion, I do believe that they need to strike up something. It's in no one's best interest to have this go on too long, because both economies are suffering because of the unclarity, where businesses are now scared to reinvest because they don't know what's going on. So therefore, we treat that as headline news because it drives down prices. We go back in, buy it. Any big bit of good news that there's a meeting happening, the markets go back up, and then we find that opportunity to now harvest and sell back out. And again, down the track, we'll probably do the same thing.
it's so good, Terry, and it just prompted me to think about changing topics slightly, but
Sure.
linking this back to farming.
Okay.
Where farms, the price of farms is just going up and up and up and up. So there's
Right.
huge capital gains, and this has been going on for a long time. So buying into a farm is really hard at the moment, or buying up land, and it just seems the more demand is pushing the pricing up, etc. But the returns on these farms, on average, are like 2% on assets managed. So.
Right.
Part of me just sort of feels it just doesn't quite add up or make sense. It's a bit like the Tesla in some ways. And does that potentially create an opportunity for prices to readjust soon, Terry? I mean, it's crystal balls. We don't know that because everyone wants to get into farming still,
right?
But I still look at particularly the average. Definitely not Farm Owner Academy clients, Terry, but in general, the returns just aren't great. So you'd almost suggest to farmers beware, right, and have the patience for there to be
beware
an adjustment in the price.
And it will. I mean, when you go back 3 to 5 years ago, everyone was in this the residential property market. That this is the place to be. It probably never goes down, but of course, as we all know, it always does. There's always a cycle, and it gets to a stage where it becomes too expensive. The returns aren't there, and then the buyers start leaving. And of course, as we saw what happened, prices for the last year and a half to 2 years now, the property market has actually tanked, and there's still going to be potentially further drops. So just like I think any asset class, stocks, farms, real estate, it's all the same thing. In the end, it's just an asset class. But now, where is the highest type returns in that you can get? And this is something that I learned from you, Andrew, how I was not aware about the very low returns on farmland. I didn't know it was that 2% range until you showed me. Yeah. And I was quite surprised that it was actually. Well,
it was the ABARES. It's not actually me. So it's just statistical data collected.
Yeah. Yeah, so it's very surprising. Yeah, so I would say if there's euphoria in farmland buying right now, definitely hold back, because there's going to be, like all asset classes, stocks, or residential property and farmland, there's going to be a readjustment, and that's if you're thinking about buying land, then that's probably the time down the track to look.
Yeah, patience, mate. It's this topic of this. It's just have patience. The opportunity will come.
Correct.
To the patient person, right?
Yes.
I mean, wasn't it Buffett that said, wealth creation is nothing but redistributing wealth from the impatient to the patient?
Correct. Exactly. Yeah.
It's a great saying, isn't it?
A great saying. Yeah. And this is where I said the last time, Andrew, for those who have missed the last podcast, where we were talking about how farmers are actually, in fact, psychologically built to be one of the best investors on the planet.
Yeah.
Because
they've got more patience.
Yeah, there's definitely farmers definitely have way more patience than the city folk. Mm-hmm. Because just from, we've got over 100 plus farming families in our blueprint program now. So I'm seeing the results of different farmers, where their results are easily beating the city folk, only because, we've got farmers that are making 20% returns. And we're seeing that. It's like, how does that happen? It's because psychology is there. They are patient, they're persistent, and and most farmers don't shy away from I guess, bad news. Because they're used to it. Whereas city folk, a little bit of bad news, and they just start panicking and selling out. And and that's one thing that farmers already have.
Yeah. So please register for Terry's free online training. Goes for a couple of hours, up to 3 hours sometimes. I know you can get amongst it, Terry.
Yeah.
You just come and listen to really the steps, or if you like, the system that Terry has to become an investor with above average returns and build wealth. So you'll get a lot from it. I'm a huge fan of it, mate. And so thank you for your wisdom today. And I'm sure we'll get you back for a future podcast.
No worries. Thanks, Andrew. Enjoyable as always.
See you, mate.
Yeah. See you, Andrew.